Hi, thank you for joining me for my update on my live account I just launched on Monday after I've been running a demo for 3.5 months in preparation. So let's have a quick look and see how the first 3 days have gone. So as you can see here, it's gone and hit an EP literally just this morning. So it made, what's the luck, eh? It made just over 1% there yesterday. Nothing went off there on Monday, but then it hit an EP early this morning from a move that's been going on for the last 2 days or so. And what that happened, I'll show you what that was. It was on gold. So you can see here, there's been quite a relentless move long on gold. And to be honest, taking into account events that have been happening globally, there's been quite a reaction from the announcements out of the White House around trade tariffs, and also as well Gaza, which at time of recording was also just over 24 hours, just around 24 hours ago. So this is just day 2 on launching, and what this demonstrates is such news events as this, or to have such an impact on the markets, it hasn't been accounted for in the last 6 months of back testing that I've been doing. This moves such as this, so therefore set files weren't created to be able to tolerate or be resilient or make profit of such moves. So it's an interesting one, and just to show you how this sits now with regards in the data set of the last 3.5 months I've been trading on this account using this strategy. Let's just have a quick look back and see how this sits, and just to put this into perspective. It's very easy to look at this and think, oh, it's day 2, I've hit an EP, oh damn it, I'm just going to throw it out with the bathwater, you know. But no, I don't intend to do that. I intend to see what the data gives me and then be able to make decisions from there. So let's go back to when I first started it. So as you can see here now, over the grand scheme of things since I launched it, the main reasons of where I set my EP around 6%, as I've explained there in previous clips, was based on the drawdown that I experienced here, and also the bit where I cut the trades off there back in October. Now the key thing here that I'm looking at is when I created the optimization files as compared to when they hit EP. So at first, the first time it did it, I created the optimization file here on day dot, okay, and then it hit EP there after 10 days, and then here as well I created it about there, I believe. So there and there are when I created it. So as you can see, there was a lead time, I believe, of about 10 days on one and 14 days on the other before they went into large drawdowns. So which if I had EPs running, I would have hit EPs at that point, especially if I had that 6k EP in place. But here for me on this one, I did my re-optimization there, and I'd sent it live there at that point. And actually I had done my re-optimization just a few days before, but to be honest, I think that's negligible. So what does that tell me? So first of all, it tells me that number one, haven't seen moves like this in the last 6 months especially regarding to these news events. I think that's the main thing. And then secondly as well, just due to with regards to the time frames, the common denominator between the optimization here and the optimization here is that, and my one here there, the most recent one, is that pretty soon after, between 7 to 10 to 14 days or so, there has been at least one EP, and then after that it has actually done really well afterwards. Okay, so the fact that I hit an EP now, yeah, it's a bummer, don't get me wrong, but does it go against the statistics of what I've been gathering already and the patterns right now today, the 5th of February, where the EP has literally just happened a few hours ago? It doesn't. I don't think it does deviate too much at all. Yes, it is sooner than when the other EPs were, but I'm okay now with just switching this back on tomorrow. Yeah, of course, there's going to be a part of me that thinks, oh gosh, I don't think I should, but that's my own bias, conflict with, say, a bit of feelings I've got. But it's about managing those and having those in perspective. And I'm going to run with the data. I can see here, as I said, really good clean earnings all along here after these drops, which has just been after optimizing. So what I'm going to do now is get it running up again tomorrow. And I did say there in previous clips that If I experience deviations from the data, so what do I mean by that? So if I start hitting another EP pretty soon after, or consecutive EPs as it were, in some way, shape or form, that I'd probably look to maybe re-optimize sooner. But in my trading plan, I've also added an extra bit on that. I think I said that there a couple of weeks ago in my last post. But what I intend to do as well is to make mine. I've not made up my mind which one yet, but I've added it into my trading plan. I've got a section which I may have mentioned before, a section in my trading plan called What If. And this isn't a place that I would use to catastrophize, but it's just a place of putting in scenarios that could happen with some sort of reasonable percentage. Okay, and one of them is if I start hitting consecutive EPs, which is out of line with the data. I said previously I'd probably re-optimize sooner, but I'd probably add on to that just simply because of the reactions to the news that's been happening in the markets, is that I may actually stop trading on the live account and carry on collecting data over and re-optimize and go back onto a demo mode, because I could be trading clearly different markets, what with a new president in the White House, and movements and actions by him have obviously effects on the market, and my back testing hasn't accounted for that. That's the one main thing now that I'm actually thinking about. But again, that doesn't mean I'm going to just jump things straight away and think, right, I'm not going to be trading now for the next 4 years or something. Not at all. Okay, I've got a reasonable body of data sitting here for these 3.5, 4 months now, and I'm going to use it. It's only when it really starts deviating from it. And currently right now, yes, I've had an EP quite soon after getting up and running, but I hope you can see through the way I've explained it that it's quite reasonable that I will stick with it to see how it goes from here, just due to the performance after I've had large drawdowns there in the back test as well. But I am, if facts change, I'm open to changing my mind and then stopping the trading the live account to collect more data and then do back testing on these events as well to get more set files that will be resilient to moves such as these. But I'm going to keep an open mind and see how it goes, and I'm going to come back to you then next week as well. So my last post, something else I wanted to bring up is I didn't have time, unfortunately, to do a post last week, but something I was going to bring up last week if I was going to do the post, which I'll just include now, just something just for me to add in, something that is also that I'm factoring in, is that when I re-optimized this portfolio, I didn't get the returns from the back test than I did in the other back test. So in the back test I did here to create the portfolio, I got a return of anything between, it said that on the 6 months of the back test, for each month I was going to get anything between 6 and 15%. And on the one that I did here, it said I was going to get a return of anything between 6 and 7%, and I think one of the months went to 20%. Okay, so on that basis, I'd assumed that when I did the back test here, I would have got something rising around the same, but actually I didn't. I actually got a lot lower, and the profit each month came out for between 2.7 and 5%, which is quite a difference. My strategy with the optimization file I used was identical. The way I chose my set files was identical as well. But just it could have been the fact it was factoring in the moves over Christmas and how markets tend to stray a bit there, and therefore I got set files that were leaning more towards the protectionist side, and therefore gave me lower profits. However, I did hit an EP earlier this morning. But going on that, where I'm going with that with regards to the profit between 2.7% and 5% that I got in the most recent one, it does make me question a little bit about where I've put my EP, which is at 6%. Because my EP at 6% was based on me getting and calculating that my earnings through these periods was going to be between the 6 and 15% there per month, and therefore I would come out, or if I hit a 6% EP, I would come out of it roughly within about a week and a half or so, due to the calculations which I shared there on the previous post there a couple of weeks ago. So I'm just bringing it up. It's just making me think about that drawdown level. Is 6k too much of a drawdown level for something that is for a portfolio that's projected to give me 2.7 to 5%. My gut reaction is yes, because that means I'll be in negative balance of where I was at before the EP for maybe up to a month or so. So what I'm keen to look at now and observe is how quickly this portfolio now recovers from this 6k EP. So as I said, I'm just bearing it in mind. I'm not going to make any rash decisions on it. It's just a factor I'm going to just take into account as I move forward. But I'm looking forward to seeing how the next few weeks are going to go in this market. Is the market really different to how it was pre-Christmas when it was performing in this way? I don't know, but I think the main thing that's going to let me know that is if I get another EP pretty soon. But I won't know that unless I'm running it. So it'll be back on tomorrow, and I will join you next week there for another update. I wish you the best. See you now.